Morgan Stanley's out. Let's pause right there. So on first blush, adjusted EPS kind of crushes it, coming in at $1.20. That seems like an unbelievable beat. So $1.20 for fourth quarter adjusted earnings. So the revenues, we got investment banking revenue, $1.7 billion. You also have the wealth management net revenue beating estimates, $4.6 billion. Equity sales and trading, a teeny tiny bit light, but still coming in super in line, $1.92 billion there. And FICC blowing it out there, $1.27 billion. I also just want to point out the net interest income also be $1.4 billion. Okay, I don't know what's bad about this. There's no number that I see that sees any weakness.
I see one,
okay,
which is the wealth pre-tax margin of 25.4%. So
it's below their
the question is there a charge there? So Sonali, I think you've reported on the fact that they've been doing these headcount cuts, and there was an expectation there would be a charge. So I guess that's my question: is that what's going on there?
So since you guys both agreed on what it was, I didn't actually get what it was. So it's the pre-tax margin for their wealth management business?
At 25.4%. That's actually below their strategic guidance that they had given at the end of last year. And so what are they going to do? When you were talking about that strategic guidance before, I just recall Mike Mayo saying, hey, James, you're blowing through all of our expectations. Are you going to raise the bar for yourself? And so not to not hit that margin here in this business now, let's see what they are saying in their update and what they want to do next.
And it's a pretty big drop from last quarter, which is why I think there could be a charge there. In general, that business is sort of at a point. You never want to say as good as it gets. But we saw a little bit of give back in Bank of America's margin yesterday. It's been benefiting from interest rates and asset prices. We still got the asset price in this past quarter, but interest rates less of a tailwind going forward.
Adjusted, it looks like that margin's a little higher at 27%. That charge was going to be about $200 million, according to people familiar with the matter. Remember, Morgan Stanley is the one shop on Wall Street that is cutting 2% of their headcount here, and that might be potentially what's weighing in here, but to be seen.
Are we being a little nitpicky with this, or to the point that things are just so good, the numbers are so high that it is going to be these things and the dispersions between the banks that are actually going to be able to help you make investments?
Well, the wealth pre-tax margin is a pretty important goal for them. I mean, that's been a real big focus for them. As we've discussed, they've increased their focus on that business, and that's been a really great story for them. So again, just want to hear a little bit about what's going on there. There are two big cyclical factors, as I said, that it's been helping them over the last several quarters. Asset prices, interest rates. We're losing the interest rate tailwind. Also going to want to hear a little bit more about what's going on in equities. Both J.P. Morgan and Goldman Sachs talked about prime and cash equities doing really well. Those are businesses where Morgan Stanley is also a leader. And so my guess is we saw some strength there. Derivatives has not been as strong.